presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
What is going on, everyone? This is Jacob Shoup filling in for Tom O'Brien. I found my razor, so the facial hair went away, at least a little bit. Let's take a look at what we got going on right now. We have the E-mini, actually kind of sideways right now from the open, but, we're trading just off about 0.03% right now. Of course, trading at 5,364 off of 5,373 from the open today. We'll see if we can make those all-time highs by the end of the day. The Russell futures off about 0.7%, NQs roughly flat as well, and the Dow futures actually going to the upside as well. Gold trading at 2,392. I'm just looking at this on the daily, but I like the longer terms to see what's happening. And so, I would really recommend gold and silver and the metals. I mean, look at silver today, right? We're up 4.5%. Copper not doing as stellar, of course, but I've made arguments in the past for a longer term kind of lookout on copper, but it's inarguable that silver is doing really well. Gold is coming right back up, probably going to go back to the all-time highs to see what it can do. Of course, when you make those all-time highs, you get that kind of pullback, but we've been seeing some kind of decreasing volume. Especially compared to that leg down. So it remains to be seen if we can test that high with some volume and we can keep going in gold. Of course, as I was saying, silver up about 4.5%. Shout out to Mike in the den. Keep those silver memes coming. We're trading at 31.42 right now in that contract, and copper futures at 4.67. Now, our buddy crude popped up quite substantially today, up about 2%, which is nice. We were trading very low down to the 72 level, and the question has always been, what is going on? We're approaching summer, right? There's this concept that it's going to be the hottest summer ever, and we're going to need more energy to cool everything. Of course, now we have a bunch of stuff going on with these new servers that we have. Bitcoin mining is at an all-time high, which requires more energy. In fact, Riot, which is a massive Bitcoin miner, just got shorted. We can talk a little bit about that. But one of the major arguments from the group shorting it is that we're going into summer and energy costs are going to be so high. Right now, we're not seeing that really reflected, right? We're still at 75.62, but we'll see what it does coming out. Of course, if you like trading crude or really just energy in it, I'm going to take a look over here at Gush. This is our friends over at Direction. This is the 2x leverage bull ETF. Very interesting if you want to get some good exposure to oil. Of course, that is leveraged, so keep that in mind. And then Drip as well is the bearish version of that. Take a look, off about 1% right now. Okay, Tesla up 1.87%. Not doing too much, about 178.29. Of course, there's a lot of conversation going on around, Tesla taking the chips that were destined for Tesla and sending it to his XAI and just what was formerly known as Twitter's company. He's going to come up with something, I promise, that will essentially say, yeah, I know he's off, he's sending these chips to these companies, but it's going to help Tesla in the long term. So remains to be seen what goes on there. Steel Dynamics actually broke down below its trading range, which is between that 140 and 130, really the 136, 130. Again, did this on kind of low volume. So it remains to be seen what happens with Steel Dynamics if we actually are turning into something a bit bullish with them. Obviously, we had a downwards consolidation in Steel Dynamics, but I don't know. We'll see what happens. And then dollar, this is the big news. Right back down at the 104.10 level. I think we briefly breached 104 but it seems to want to stay kind of low. All right. What is some interesting stuff going on? One of the big things I want to talk about is TSMC. If I can pull it up. This is kind of just a short comment on it. Oh, it's TSM, right? Yeah. There we go. So we're off about 0.52% right now. However, it's pondering boosting the AI chip production prices for NVIDIA. So they've had sustained demand for their goods. It's been very nice. Their last report out in April was just stellar. I think their product was up like 60% just getting it out, right? Which is pretty nuts. And they're thinking about raising the price, which would be phenomenal because that's not going to decrease demand for them. NVIDIA is still going to be buying their stuff. And Huang literally said that TSMC's wafer price is too low, which is pretty nuts for him to add. And NVIDIA, wow, accounts for 10% of TSMC's 2024 revenue at least. Hiked prices by 10% in 2022, another 5% in 23. And honestly, they probably could hike it even more. Trading at 162 right now for TSM. I mean, look at this, even beginning of the year, trading just at 100. If they do hike the prices, it's not going to, I don't believe it's going to cut into the demand at all. And it'll be good for them. So that's just something to kind of think about. Of course, just do your due diligence on that. Let's talk a little bit about CrowdStrike. Because they killed it and are really bringing up a lot of the cybersecurity ETFs. I think Basil was talking about that earlier as well, and that was just a fantastic overview. As always, look at this huge volume moving up, a big gap up right now, trading at 343 for CrowdStrike. Let's take a look. Shares of cybersecurity company CrowdStrike soared on Wednesday after reporting strong earnings results. CrowdStrike gained nearly 10% midday, this was yesterday, after it said its revenue in the first quarter grew by 33% to $921 million, ahead of $905 million consensus analyst estimates. Adjusted earnings per share came in at 93 cents versus 90. Has an 81 billion market cap, a little bit higher right now. As the second largest pure play cybersecurity company behind only Palo Alto Networks. It destroyed Palo Alto. I think we're going to start seeing money come in to cybersecurity again. Of course, large companies, I say this all the time, but they had reduced their investing on it, which is a bad idea. And we can see outflows starting to come up again, or at least for spending on cybersecurity, which is really solid for that industry as a whole. And, you know, I mean, let's see, we look at Cisco. They recently bought Splunk, which was massive. Cisco is interesting because they're so large right now. You know, you have this concept of giants, right? And these large companies cannot always increase in such a substantial way that it warrants the stock price going up, right? They're not going to grow super, they're not going to grow as much as smaller companies. But adding something like Splunk, which is massive in IT, and if they can integrate that very well, I think we could continue to see a really good case for Cisco growth as well. So anyways, folks, stay tuned. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee, so what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. He will be back tomorrow. Looking at NVIDIA right now, they're going to have that big old 10-for-1 split. Trading at 12.01 right now. The dividend is coming out too. Obviously, now when I was talking about this, they were what, the third largest company by market cap, and I believe they're now the second. Okay, we're right under 3 trillion. I think they had hit 3 trillion briefly, but right now we're at 2.9, which is still an absurd amount. So that's going to take effect here, I believe, tomorrow. And this is just in time for the FTC to open an antitrust probe, specifically into Microsoft, but that does include NVIDIA in some case as well. We'll talk a little bit about that. Microsoft is just down slightly right now. These, it's not getting hit massively, but basically in March it hired Inflection's AI co-founder and almost all of its employees and agreed to pay the startup $650 million as part of a licensing fee to resell its technology. Inflection's investors were told they would be repaid over time by sale proceeds. Companies are required to report acquisitions valued at more than $119 million to federal antitrust enforcement agencies, which have the option to investigate a deal's impact on competition. This FTC has been sifting through AI investments made by leading companies such as Microsoft and Alphabet. If the agency finds that Microsoft should have reported and sought government review before its deal with Inflection, the FTC could bring an enforcement action against Microsoft. Yeah. And I guess this is, okay, I see with this as well. This would have the ability for them to probe Microsoft and OpenAI too, while the department would handle NVIDIA and the semiconductor firm whose chips are essential. Anyways, I don't think that's going to come to anything at all. On some theoretical stuff, it's interesting because I've been reading about how they're training this AI, and it's almost, there's a question now being asked is what happens once these models run out of like human created literature, right? And the problem that is increasingly occurring with large language models and image generation things like, oh my gosh, how can I forget the name of it? Midjourney, is that it doesn't have a lot of creativity, right? So you can see this in Midjourney too. Like if you ask it, take a sample size of like pictures of orangutans and then have them make a whole sample, it's not going to be as diverse, right? This is going to become an issue with large language models as well. It'll be kind of interesting to see if there actually is a cap into what these large language models and image generating kind of softwares can do, which would be actually kind of interesting and honestly would, create some big issues. Anyways, let's move over here. I just got the buzz. Go over here, type in to your URL search bar, ord-oracle.com. Okay, Tim Ord is on every Tuesday and Thursday for the Tom O'Brien Show. We love having him on. I believe last time that I was on with him, I not on Tuesday, but I believe last Thursday, we had a nice bullish sentiment going forward. Of course, we were in the middle of a pullback there, and it looks like we were moving back up. Tim, how are you doing?
Good. Thanks for having me on again.
Happy to have you.
Well, good. We got several charts, so we can start off with
let's crack into
chart one if you want.
Perfect. I have chart one up right now.
All right. This is just kind of a look at the bigger market. Actually, I think last week we were looking for a low, and the market did bounce up. The bottom window on this chart, this is a monthly chart. The bottom window is the VIX, and the middle window is the SPX on a monthly time frame. And what you want to have here is when the S&Ps are making higher highs on a monthly time frame, you want the bottom window is the SPX VIX ratio on a monthly time frame, and you want that ratio to hit higher highs as the S&Ps hitting higher highs. And I kind of outlined in green there that's what needs to happen. That's what's going on. So the bigger trend's up. It doesn't try to pick out every up move. Some months you'll be down, but in general, the intermediate term trend's still up. What you don't want to happen, if you go back to late 2021, and you'll notice the S&Ps were making higher highs, and that ratio was making lower highs, and you got the decline of 2022. Mm-hmm. And before that, you got back that the COVID crash. It picked out the COVID crash because the S&Ps were making higher highs. That ratio was making lower highs. And then you had the March crash of the COVID crash. But right now, on the monthly time frame, everything's okay. So there'll be some down weeks along the way, but we shouldn't have any decline of any consequence. I'll put it that way. So let's go look at the short term on page 2.
Yep. You're good to go.
So now we got a little bit different story going on. Bigger trends up. The bigger trends up. The bottom window is the ARMS index, which is up around 1.14. It's kind of a panic index. It's not really saying a lot. It leans bullish. Next window up is just the VIX. And notice the S&Ps, the top window is making higher highs, and the SPX VIX ratio is making higher lows. And that's a negative divergence on a short-term basis. So also, if you notice yesterday, the chart's a little bit messy, but if you look at the volume chart, the volume, I got some blue dotted lines from the previous highs on the SPY chart. And the previous highs was a couple of weeks ago, and I got it circled in red. And yesterday we broke above that previous high, and if you kind of see it there, we did it on a lighter volume. So you got two different versions. You broke a previous high in lighter volume. It looks like about at least 10%, if not 15, 20% lighter volume. That's usually implies a false breakout to the upside. Yep. To have a valid breakout to the upside, the volume should be at least equal, preferably higher. And here where the volume dropped about 10% or more, that implies a false breakout. And also, with that false breakout, you have a higher VIX. So you got two divergences going on. That's the reason why I said on my market letter yesterday, we're probably not going to hold the highs of a couple weeks ago. We're probably going to fall back. Nothing real significant. What I think is forming here on the S&Ps starting, looks like about mid-May, is probably a head and shoulders bottom, where last Friday's low, which was the selling climax, that's that big spike in volume there, was the head. And we got some bullish trend readings right around that area suggesting, okay, now we're going to rally from the head. And I didn't know how high we were going to go. We just basically broke above the previous highs, but volume dropped off. So I'm thinking we're going to go back down around that 550 or 525 on the SPY, which is pretty much where the left shoulder bottom is. So I'm thinking this whole pattern that's going to form here is a head and shoulders bottom. course, the selling climax is ahead. You try to get it through the previous high. You did not have a sign of strength. You had actually a kind of a sign of weakness to the previous high. That usually fails. You come back down. Support around 525. I think that's what's going to happen. The VIX kind of confirms that. Then from there, the next rally, I think, is going to show some strength
Some actual
to it.
strong
and that
volume.
may come next couple of weeks or so.
Fantastic. Well, Tim,
So-
stay right there. We have a commercial break, but we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We have Tim Ord of the Ord Oracle on. So, Tim, when we went to the break, we were on chart 2. We're actually looking at what was less volume going up, testing those highs.
Right. And actually, yesterday's volume tested a previous high of, I forgot what that was, probably looks like about May of 23rd, somewhere in there. And so it broke a previous high. Then now, if you look at today's volume, we got about a half hour to go here. This chart's a couple hours old, but I'm looking at the volume today will be not even near yesterday's volume. And today we touched a new high above yesterday's high. So that kind of reinforces the idea we're probably going to get a pullback, I don't know, starting, maybe it started already, even though, kind of unchanged right now. But to go through a previous high should have a sign of strength. And what's happening here, which is sign of strength including volume, and we're not having a price surge or a big bump up in volume. Matter of fact, you're having a pretty much unchanged day and as far as prices go, and volume's going to be lighter than yesterday, so we're not seeing a sign of strength here.
Right.
So what's probably going to happen again is a pullback to that 525 area. Nothing very big, just kind of a sideways consolidation. And I think probably the big part of the rally will start maybe mid-June, somewhere in there, and that would be worth catching. A lot of times you rally into the July 4th time frame also. That's usually a strong period for the market. So, but between now and then, you have to be a little bit of patience here. So I'm staying long. I'm looking at the bigger time frames. I think the bigger time frame's still up, but it could be back and forth here for another couple of weeks or another week or two. So we can move on. Chart 3.
Let's pull it up. All right. Let me refit that. Okay.
All right. This is a weekly. We've talked on your show about the monthly cumulative up-down volume and cumulative advanced decline, and they have to close above the mid-Bollinger Band to signal a multi-month, if not a multi-year rally. That was on a monthly time frame. This is a weekly time frame, so it gives more false signals. But what I wanted to talk about is, like I said, it gives you a little bit, since it's a weekly chart and it's more shorter term than the monthly chart, it does kind of sometimes give a whippy chart. Back in 2023, I got some dotted red lines going in there, and that was a failed signal. It did get above the mid-Bollinger Band, but fell back. But what I want to point out is to the very right is a blown up portion of what those indicators look like. And what I want to point out, all of them are above, this is a weekly time frame, all of them are above the mid-Bollinger Band. So what needs to happen here, and probably what will happen here, is all three of those indicators are probably going to continue to gain strength. It's not a price chart. Price chart may actually even consolidate, but what you need to happen is for those indicators in general to move higher. So they're not going to stay at the current levels. They're going to probably even accelerate to the upside going forward. What that tells you is the up-down volume, or the up volume, is increasing compared to the down volume, and advancing issues is increasing compared to the declining issues. And that's what happens in bull markets. So volume is going to be going up compared to down volume. Advancing issues is going to be going up compared to the down issues. And so everything on the very right of the chart should be going up, even though the GDX may flip into a sideways trading range. Mm-hmm. And that may happen, but there's really no downside here, part of GDX. But those indicators should keep going higher, and it's something we'll be watching for. Just like if you go back to 2012 high, that very first red line I have drawn on the chart way to the left.
Yeah.
The declining issues and the down volume kept pretty much going down, even though sometimes GDX went sideways. So this is the opposite of what should happen here. So that kind of confirms as we go forward what we'll be looking for. So let's look at chart 4.
Yep.
What I want to say about this is that top window. I talked to, I think Tom, we talked to Tom on Tuesday, and I said, really, there's no downside on GDX. I think as we're talking on Tuesday, I said, GDX, the reason why this is a monthly GDX on the top window there's a head and shoulders bottom going on, and I have a blue trend line drawn as I assume that's the neck, or that is the neckline of a head and shoulders bottom, and it kind of had a sign of strength through the 34 area. So once you break through a trend line with a sign of strength, that trend line becomes support. So every time it gets down to 34, range is not exact number, but probably 33 to 34 and a half is probably the range. That could be an area to buy GDX because that's where that trend line lies. And since you already have a buy on a monthly chart, that's a low risk buy support area. So I'm thinking this is a head and shoulders bottom. As you can see, I have a head there, which is basically the October of 2022 low, and the right shoulder is, we just came off the right shoulder and the left shoulder. So anyhow, this chart dates back to 2021, so that's a 3-year chart, and we're just breaking out now. So this is, in my opinion, a very early time in the bull market. So it's still in the infancy stage. This is still the beginning, even though we came quite a ways up from the October low, which is around 20. We're up around 34 now, which is a decent run over a couple of years. The majority of the run is still in front of us, just because the monthly charts, which is the bottom two windows, the bottom window is the up-down volume, the next window higher is a monthly advanced decline. Once those turn up, previous times, the shortest time was 1.5 years. So what's in front of us is at least 1.5 years from right now. So we're very early in the stages. So it could be extremely rewarding going forward here. So there's a big shift in the market. I think some of the cash will be coming out of the market, not probably this year, but probably next year, out of the equity market, and it's probably going to go into the gold market.
Right.
So I see we have another commercial coming up here.
Yeah, and I just want to say, so when we're getting that sustained motion above the mid-Bollinger Band, this is really what you want to see for something bullish, right? On the above that Bollinger Band.
Yeah, you should not fall below it. From here on out. In general, you're going to keep going higher and higher on both those two indicators.
Right on. Well, Tim, stay right there. We'll be back after the commercial break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. We are joined by Tim Ord of the Ord Oracle. Tim, before the break, we were looking at the GDX. I was mentioning how you want to see that sustained close above the mid-Bollinger Band in the monthly advanced decline and the other monthly as well. And I wanted to see if you had anything else on this chart you wanted to say.
Actually, you could go to chart 5.
Yeah.
It's less noisy. You know, sometimes I get these charts so messy you can't see the forest through the trees. But anyhow, the top window, I have things labeled there a little bit better. You can see the top window is a monthly GDX, and you can see I have the neckline drawn there, support around 34. And the head was October of 2023, I guess it was 22, and the right shoulder formed over the last year and a half or whatever, and we finally got through that neckline. And at the same time, the monthly cumulative up-down volume advanced line indicator broke through their mid-Bollinger Band. So you have a lot of type of different technical analysis tools that kind of confirms this is really a breakout of the head and shoulders pattern through that neckline. So the chance of failure is always possible, but it's unlikely. But anyhow, this head and shoulders bottom has an upside target around 55. So that doesn't mean that's where the high is going to be. That's the minimum upside target projection for this head and shoulders bottom. It could get back to, I don't know where it could go, but that would be the minimum, and that's pretty close where the 2012 high was. So there's probably a lot of stocks are going to go 10 for 1 here. In other words, if it's $1, it may go to $10 before this rally runs out. Depends how long the rally lasts. But a year and a half is normal. 3 to 4 is possible. So we'll see. I think this is going to be a longer lasting rally. The reason why the last two or last three advances, or the rallies and declines, the bull markets and the bear markets for GDX, all of them kind of lasted about 1.5 years. So I'm thinking this one is going to last 3-4 years. So it's kind of a rule of alternation, but we'll see how it works out.
Sure.
But once these indicators turn back down is when which is, I think, a long ways away, it'll be when to get out of the gold stock. So, but right now we don't have to worry about that. We're in the early stages of the bull market, and it could last a while. So, excuse me. Let's go to last chart.
Pulling it over right now. Yep, we got it up.
Right. This is kind of the formations I like to see. This isn't necessarily this is Corleona, or can't quite read it. But anyhow, I really don't look at names of stocks. I look at how the formation's forming.
Right.
And this is a monthly chart. So this is an ideal way to look at gold stocks going forward here. You really want to pick the ones that the Bollinger Bands are squeezing on. So this is an example of a potential one that may go 10 to 1 or even better. But you want them above the mid-Bollinger Band on the monthly time frames. You want the Bollinger Bands to squeeze together so that, if you notice this stock, going back to late 2022 really hadn't gone anywhere. It pretty much went sideways, and that's what normally happens in base building. The longer the base, usually the longer the rally occurs. So this thing's been base building, close to 2 years now, and the Bollinger Bands are squeezing together. If you notice, the volume is really picked up here. I got a square around the volume. Compared to previous years, this volume on the buy side, which is green, if it's red, it's on the sell side, is all picked up to the upside. And so you're actually seeing a sign of strength going through the mid-Bollinger Band. So how high is high this stock? I don't know. But I wouldn't be surprised to get back to the old highs up around $2. So is it 10 for 1? Not quite, but, it's one that has prospects that could be really a big winner. And the volatility should become more straight line since it's really base building here. It's due for an impulse wave.
Yeah.
An impulse wave is more, more up and down. It'll kind of just persistently be up from month to month. So, and it's still in a buy range. The mid-Bollinger Band was probably a little bit below 20 cents. We're at 23 right now when I did this. So it's still fairly early in the stages. And if you notice, the mid-Bollinger Band actually have turned up. And that's so momentum on this chart is turned up.
Yes.
So it's I thought I'd just show that if you can find other charts that look similar, which there are, there's a lot of them out there that look similar to this one. This is the one I focus in on the monthly time frame first, make sure the monthly time frames is turned up, then I go back down to the weeklies and dailies from there. But
you can even see the pinching.
I'll put it that way. No guarantees.
No, for sure.
But I bet in 6 months from now, this will be a lot higher than it is right now. So, and plus you got the market going with this stock. This is a gold stock, and the gold market has turned from, bull to more extreme bull.
Yeah.
So,
and you can even see the similar setup from 2019 as well on this. So I'm going to zoom in a little bit on this chart because it's kind of small, but even in the beginning, for everyone watching back there, and correct me if I'm wrong, but you see this pinch setup as well, in 2019. Then we cross above that Bollinger Band, and then it really just takes off in a major way. I'm curious, Tim, because I'm not familiar with this, but the bottom window, that slow STO, can you give me a little bit of insight in what that is?
That's a slow stochastics.
Okay.
It's kind of a momentum indicator. The next one is MACD, but it's a slow stochastics. Usually I got away from a lot of those type indicators is because the Bollinger Bands work better than anything else I ever found because it gives you a lot of clues. If you notice on that, if you look to the left, that 2019 period, I have some circles on that chart. And the reason why I circled those, if you get 50% above the monthly Bollinger Band, a lot of times you get consolidations. And so that's the reason why I was kind of circling those. Those are kind of like on a monthly time. In other words, the market's gone too fast, too quick in a direction. If you get 50% of the open and close on a monthly time frames above the upper Bollinger Band, a lot of times you get a pullback. And if you notice, back in July of 2020, 100% of that move on the open and close was above the Bollinger Band. That marked the top. And that's pretty common on a lot of different issues over the years. So always kind of watch. If you punch above the upper Bollinger Band, a lot of times, especially if you get 50% of the trading range above the upper Bollinger Band, you're going to have some pullback. So that's the reason why I circled that, to kind of remind myself. But anyhow, this stock is prime. It's got volume. It's got momentum and everything I really want in a stock. This particular stock has it, even though it's only 23 cents. It has a lot of promise.
Love it. I have so many more questions, but we'll have to wait for the next one. Tim, thank you so much for joining us as always. Folks, if you want to check out Tim's stuff, which I really recommend you do, you go ahead and head over to the oracle.com. Come on, he's great. Tim, thank you so much for joining us.
Right.
Take care,
Talk
Tim.
to you on Tuesday. Thanks a lot.
See you Tuesday, Tim. Folks, we'll be right back after a short break.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hey, welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We were just joined by Tim Ord of the Ord Oracle. If you missed that, I'd really recommend, again, checking that out. Go over to our YouTube channel at TFNN.com. While you're there, you can like and subscribe our videos. It helps us immensely because we want to continue to bring you some of that elite content. And I mean, seriously, both, I love watching Tim and Tom on at the same time because these, there's so much stock analysis online, right? But one of the things I've really learned at TFNN is, these guys have been analyzing this market and trading for longer than so many of these influencers have even been alive. And it's just so amazing. And even with Tim Ord and Tom, they were calling this run up at like 1,800 on the gold contract, which is nuts. We're trading right under 2,400 right now. So fantastic as always. Really enjoy having him on. Now, we just have a short segment right now. So what I want to bring up, and I think, we've been getting a lot of younger people coming into to the Tiger family, which is so solid, and we love to see it. And a lot of us younger guys, and gals, we tend to rent. And as we all know, it affects people who don't even rent, right? Because you have issues with CPI as well. So let's take a look at this. Of course, it came out in January that RealPage was being marked for potential rent manipulation. And then just today, just a few days ago, the FBI raids Cortland Management, which owns, I think, like roughly, I don't know. They own tons of property, okay? And so the idea is that they were in collusion with RealPage. This really started, I think, in the Phoenix area, right? In Corley Management is pretty big in Phoenix, Arizona. And so, of course, you had some lawsuits come out of there in November of last year. But anyways, it looks like this probe is ramping up. And what's so solid about this, even though there's a lot of civil stuff coming out, if they are manipulating, this is through a criminal antitrust probe, which is really what, people who are trying to eke money out of the working class, they need to be looked at in this way. Folks, thank you so much for joining me. Always love coming on with you. Tom will be back on tomorrow, and I hope you all have a great rest of your day.